Good evening, everyone. It's Chris from Solstice ATR. You can find us on Twitter, Instagram, Discord, and YouTube. If you like this video, hit the smash button. Give us a like, thumbs up. If you don't, give us your commentary. Either way, we would know. We use this adaptive algorithm for our trading use only, for side market, up market, down market. You remember, we're not a broker dealer. Past performance does not give us any indication of future results due to the fact the market can do what it wants. We trade levels according to momentum, supply and demand zones, compression, expansion from those areas. If you need more information and you'd like to know about it a little bit more for educational purpose, give us a jingle at that number. Once again, smash the like button. This is where you can find us. Let's go to the first channel. I put YouTube up here. We do the weekly video. Usually I drop them in LinkedIn and I drop them on Twitter for people to see those videos. You can subscribe to that channel, get some information that will help you in your trading and your goals. Let's go to the first slide. And now what I wanted to do, go on the Twitter account. I am not logged in, and I wanted to show something about gold. I had mentioned gold on February 28th, that night in our group. And the reason behind it, I wanted to show the commentary. I said, please find the level, take a trade. It doesn't mean that you have to buy it. You can watch it and learn from it. And from our experience over the years, I had mentioned that gold was going to find a level, get some support, because there was a lot of consolidation in this area. And this is where most of the time, as well as the POC, most price action, was this value at the 1800. And I said to everybody, look at gold. It is in a bearish tone coming back down, but it's going to find support on a Fibonacci between the 0 and the 100. This is your 0. This is your 100. This is your 38. This is your 61. And that's your 50%. And I said, if this holds in the 50 simple moving average that is in yellow, look to buy gold in the direction of a reversal going back up, because I considered this leg down, this leg up should create a shoulder going back up. And this is what happened. And I used as well the ETF, which is GLD, and I showed this level as well on the charts. If I zoom in here, I'm just going to zoom in. You can see where the time spent in the POC are. I marked this area here. And if I look to the right, it was around 167, 169. And we found this level and we rallied back up. So pay attention to my commentaries. It usually will help you. And if I go back all the way up to my daily commentary or weekly commentary, you can see on daily basis, I will put something up, tell you, hey, buy the market. In each slide that I have, I usually put a commentary on different sectors: NY New York Composite, mid cap, bond market, XLK tech sector, RSP is the bond market, XLV is the healthcare sector, financial, biotech, SPY is the Fortune 500, small cap, SCHA. I'm not going to go all over them. Small cap, XLE is for the energy sector. SPSB is global for the corporate bonds. QQQ is the Nasdaq and the Dow Jones Industrial. And I said, anything is possible. We're going to pay to the federal policy, what inflation is doing, what the global market is doing. And this week, we had an issue with the Swiss banks. And the prior week, we had the Silicon Valley, the banking sector. So we have to pay if the government or the Federal Reserve Board starts to slow down interest rate by 25 basis points instead of 50 because they made bad decisions. We have to pay attention to them and be able to trade what we see. Let's move out of here. I'm going to X out of here. We're going to go to the first slide. And I actually put on purpose gold. Usually on our trading charts, we use a weekly and a daily for the long-term hold, because if you are not behind the computer, you need to trade on a swing trade because you are not behind a computer like an active trader such as us. You got to look at the daily and the weekly for direction, this is the daily, which I have only, you can see 3 month, 1 day. Down here, I have a 5 minute, 1 day, and here I have 15 days, 4 hour to see where there's the consolidation, the breakout, retest of the breakout again, consolidate and break up. This is the gold came from the 168 all the way to 185 or 170 to 185. That's a $15 range in the GLD. Let's go to the GC, which is the gold, which is the pure contract, or we can use the micro GC. Oops. Micro GC, and I'm going to expand these charts to go on the daily and the weekly charts to see usually a breakup and a breakdown. This is only a 6-month range. If I go to a daily 1 year, we can see that we fell back down, found support on the daily on the 250 simple moving average. The 116 caught its breath. The 50 and the 5, the 18 and the 50 crossed, and the 5 crossed the 50 in the direction to the upside, and you broke out of this consolidation in this area. If you had drawn a downtrend channel from this high down to here, and let's do this together so you guys can see it. So that would have helped you enter a position and if I duplicate it, you came out of the linear, you came out of the linear regression downtrend, edit the property, duplicate the drawing, grab this channel and put it down here. You can see that this downtrend, we eventually double bottom reversed. We took this first trade up. We took some profits out, came back to the same level, bought it again because of this consolidation here, rallied back up and broke out of this channel, go long, trailing stops, take some profits on the way up. This will help you in the trading without being biased. The RSI down here, you can see it's in a downtrend, reversed from that 70, 30, 25 area back up, fell back in range. This is a higher low from the prior low here. In an uptrend, take it, going back to 50, above 60, going back towards the 80. The RSI goes usually between 70 and 30. We use 80 and 20 in our room. Sometimes we use 85 to 15 at the bottom for change in trend. This is now getting a little bit extended, but you can see the micro GC where it is in relationship to the prior levels from the prior year, came back to retest this candle that took us all the way in a downtrend channel. If you grab this, this was a downtrend. We broke up, looked above. We came here. This was a downtrend. Looked up, you stay in the trade till you lose this candle here and you fall back in. So you trade channels, resistance and support, supply and demand, and you look for those levels to help you out. This is why I wanted to go over this a little bit more in detail to show you how it looks like. So let's go from the GC to Bitcoin. BTC, due to the fear in the banking sector, BTC finally came out of the woodwork from the 17, and we had called it in the group. I don't want to go that far back. I had called the 17,320 in my group, and I said if we break up, we're going to fill partial gap here and eventually the second gap here. If I do zoom in, we were coming in a downtrend. Eventually the RSI started to peak. We broke out of this downtrend channel. You can see that 17,000 looked up. We still have this gap here, which was retested here, no longer valid. This gap is out. You can remove this draw and remove it. You can see that gap is there, retested, broke up and continued higher. We're testing the 89 EMA. We have not filled the 100% of this gap. You can see it. It's still above us. Once we fill, we can come back to this consolidation. If we end up breaking, you look for the backside of this channel and the 116 SMA, that downtrend we were coming up from to fill the second gap and the first gap. So that's our goal in BTC. Make sure you protect the 25,300 as your line in the sand in Bitcoin. If you are long from this area, again, make sure you have your 25.3, 25.2 as support on BTC. We go to the daily so you can see the levels. I wanted to zoom down. I had these three ovals here. Now you can see where the breakout happened. We're coming back to retest this area. If we come out of this cone, you are in an uptrend. You can see that linear regression downtrend. This one is no longer valid. I can remove it. We can go from here to this channel here. You can see that this linear regression channel are very identical, or even if I connect it to the top, I'm looking, it may come back in a little bit. Pay attention to the 25.3 to hold us in order to continue higher and fill this first gap here in BTC. Let's go right now. Take a look at XLK in the tech sector. We can see on the daily, we're going to go to the weekly 5-year time frame. We're going to go 5 years, weekly chart. And the reason behind it, I wanted to show the February 19 COVID-19, the March low, the consolidation from in 2020, the August, September, October before the rally to December, the January low, the rally in 2021, 2022, we fell back down to this consolidation. We found a shoulder ahead every time we touched the 50 SMA, rejected, touched the 50 SMA, rejected. Finally, we broke out. And if we zoom in here on the weekly XLK, we can find that the 50 SMA is holding us in the 18. If the 18 crosses the 50, it is momentum is bullish. We stay above the 116 simple moving average to continue higher. There may be a shift in the tech sector from the banking sector and consumer products, and you can see this gap right here. If I put a box between here and here, we do have this gap in the profile that we have to pay attention to. You can go like this, and you can always edit the property. You can see it says 2022. If I go 2023 here, and I put, instead of 8, I put 3 for March, you can see where that gap is in case it does spill in XLK. Let's go now to NYA, the New York Composite, because it consists of more different sectors of 2,500, 2,000, whatever you want to call it. The trend is down due to the fear in the international as well as domestic market. You can see the NYA, or the New York Composite, fell further down, testing the 200 SMA. Does it find support at F6 and F5 to break up above that trend in order to change the trend in NYA? Let's take a look at the global markets as well as the domestic. We're going to look at the bond last. I want to look at EAF. EAF. We can see in EAF that the international companies or the coming to a downtrend halt. We want to pay attention if these things are going to change or not in the overall market, or VEU. I'm just trying to give you different ideas. I'd rather use the Vanguard All World Exchange Traded Fund. We can see due to the European zone in the Swiss bank and the overall market, people are having a little bit of fear. They had, a bailout from France and Europe, giving them money to balance out their books. And you can see that they slowed down in the interest rate. It fell down by retesting the Fibonacci F5, which is the 50%, coming back to this area. Does it stay below the 50 SMA to go to the 61 and rally back up, or does it revert back? We got to pay attention to what our Feds do this coming week on Wednesday with the interest rate, quarter basis points or half a base point. I'm thinking it's going to be a quarter. It may be priced in the market so the economy doesn't go in hardship and we go into a recession in the overall market. Let's take a look at $DJI, which is the Dow Jones Industrial Average ETF for the Dow. You can see that the Dow fell back in, but if I go to XLK, you can see that the sector moved back up. And we can take a look at the XLV, which is the healthcare sector. You can see that the healthcare sector fell down, but we tried to close on this week on a positive note, but we're still below the 50% of this bar on the weekly bar on XLV. Let's take a look at TBT, the interest rate bearing account for the bond market. You can see that interest rates started to fall down, which is the ProShare Ultra 20-year bonds. And if I go here to the ZF, which is the ZF, the future contract on the 5-year Treasury notes, we can see that the Treasury notes this week, last week, and this week rallied and tried to break up towards the 50 SMA and the backside of that downtrend channel that we fell from. Does it consolidate to create a shoulder to continue higher to the 38? We have to pay attention to the bond market and interest rates, or you can take a look at the JNK or the IEF to help you out in the bonds. Let's take a look at SPY, which is the Fortune 500 company. We can see on the weekly chart we are in a downtrend. We came back to this area of support. We fell from this candle. We're going to remove this channel. We can see that this downtrend, we are in a symmetrical triangle wedge. You can see the uptrend to this one here, this downtrend to this candle. We are in a triangle. In order to continue lower, we got to pay attention to the 200 SMA, the backside of the 362 and the 348. If we end up coming down here due to the Fed, or do we reverse back up from the lower section to the upper section of that symmetrical triangle that we have on the weekly chart? If I go to the daily chart, let's look at it. We tried to close on a positive note after this last week's move down. This week was Monday, Tuesday, Wednesday, Thursday, Friday. Friday closed inside the candle on the SPY of the Thursday move up. This is an engulfing candle, but we had an inside day on Friday, while the Thursday was a big candle reversal back up. We have to pay attention to these levels and trade what we see on the charts. So if I go back on the chart here, we can see we are in a symmetrical triangle. On a 5-minute, usually the trend, this is from Sunil in my group. He created this RSI. I kind of tweaked it a little bit. I have a different RSI with thermo here. I have an RSI divergence that we use in our group. I've been using it for years to help us out. So we usually trade off a 5-minute, but the 4-hour and the daily are usually directional for the swing trades. And the short time frame from 15-minute, 5-minute, and hourly chart or 4-hour gives us a direction and a sentiment when we are active traders in the overall market. So we are not biased, and we can see that last week's move up, we fell back down. In this week's range, if I count these days, we had an up day, down day, up day, down day, and on Friday we had an inside day. So you can trade these ranges as long as you know where you are trading in the overall market, because this is considered compression. Once it comes out of compression, does it continue to the upside or the downside? We trade what we see, not what we think. And what I want to do is go in here, maximize the sell. And we can see on this chart, I do have quite a bit of range. Usually you look at the weekly range, excuse me, from Sunday through Friday, because this is your low from Friday. This is your Thursday high. So we get a measured move to understand the level. So I know my low is here. My high is here. We can see it. This is our range. We know the high and low are up here. But the most important thing in trading is you know your levels. If you're going to go to the upside, these are your extensions to the upside, where it gets overextended at the 80 to 100%. And similar or vice versa, when we fall down in that range to the 200 and the 180, usually that's a buy zone. Doesn't have to. We can get 2 standard deviation, but this is something simple to recognize. Are we in range? Are we trading inside the prior day week's range? Are we above or below? And even if I activate this, even if I activate it, watch this, activate the drawing, and I grab this to Friday's low, and I take this to the high of last week's range, because this was Sunday. This is the high. You can see where it is. Okay, I'm just going to kind of give you the reference point. Usually when you are between the 20 and the 0 line, usually there's a buy zone here. We can let it go. And between the 0, the 100, and the 80%, usually there's a sell zone when you are coming in and going back up. So we trade what we see, not what we think. We usually use the 5 and the 18 for change in trend. The 50 keeps us in line if the trend is down, or the 50 keeps us in line if the trend is up. Because if I do move this to a 1 hour, 20 days, you can see that the trend usually flip-flops on the hourly between the 50 and the 18 and the 5 in the direction of those moves. And the RSI, or the momentum indicator, or stochastic, will help you know where those levels are. I hope this video was very helpful. I look forward to seeing you on our Twitter, on Discord. Give us a jingle. Let us know what you think. Hit the smash button. Enjoy your weekend. Take care. Over and